talk more about Disney's quarter. Tom Rogers is here, Executive Chairman of Windview, former CEO of TiVo, former NBC Cable President, CNBC contributor, and all-around bright and smart guy on all things media. So the question is, we've got a handful of them. On the OTT product, this combined product at $12.99, is it a success, or will it be a success, and can it be a success at that price?
Well, it's a great question. First, let me just say I think Julia did a great job with the interview with Bob Iger, particularly bringing up trade. And as we think about the broader stories this morning, Disney really should be a model for how companies have access to the Chinese market. Disney has about 10% of the Chinese film market. Obviously, the theme parks over there have done very well. As Iger said, who knows what the impact on them will be. But as a model for access, it's really something for everybody to study. To your question, Andrew, look, I think hats off to Kevin Mayer, the executive at Disney who oversees all this, getting a bundling program together. They need to do that. That's very smart. But it does raise some important questions. If you buy those services individually, they cost $18. Now they're going to cost $13. That $5 discount is a big deal. I'm not sure in the break-even numbers that they put together that's fully factored in. Equally important on the economics there is that the deal that allowed that bundling to happen, which was the deal they did with the parent company here, Comcast, that allowed them to have full control over Hulu, opened up the ability for them to take Hulu international. We didn't hear much about Hulu International other than it sounded like they were going to go slower in terms of how many markets they were going to open up a year, maybe a few a year. But Hulu International is going to be a very expensive proposition if they're really going to go at it the way Netflix has. Netflix is in 187 markets. It's in every place from Ethiopia to Greenland. And if they're ultimately going to chase that, that's a big additional dilution that probably hasn't been factored into their break-even.
Sorry. Tom, did they just pay too much for the Fox assets and Hulu? The stock is off $12, $13 billion today. This is a pretty big whiff.
But that's after a nice run, remember.
Yeah. It's after a nice run, but it's down 7–8% from the high about a month ago.
Both great points. When you put in a media context how much of a run they've had, the $40 billion in market cap that's been added to Disney since they announced streaming is more than the value of CBS and Viacom combined, if they in fact do combine. So it's been a big, big run.
Right.
On your question on Fox, I do think ultimately the price of the Fox transaction is going to be questioned. When you strip away the fact that they sold off their Sky interest in the regional sports channels, it's still about a $50 billion price tag. The $50 billion price tag got them National Geographic Channel and FX. Both are going to be traditional TV channels that struggle like all the others, and a TV and film library, well, a studio. We see what's happening with the studio, and people are going to question the Fox studio value. The library certainly has value, particularly as they need content to go internationally. But is $50 billion the right number there, particularly with the investment in originals they're going to have to make? I think that's going to be a big question.
Okay, Tom, thank you. Julia, awesome interview with Mr. Iger. Thank you.